New research out today shows a couple of very distinct groups of landlords, those who hold property for just a few years and those in for the long haul. And it could help explain some of the struggles facing the Australian rental market. To help us understand the study, we're joined by Dr. Michael Fotheringham, Managing Director of the Australian Housing and Urban Research Institute. Good morning, Michael. Thanks for joining us.
Good morning.
Plenty to talk about this week, isn't there? How does this research, do you think, add some context to this debate we're having, this big national conversation about housing?
Well, most of the conversation has been about first home buyers, but of course there's a large group of Australian households, about a third of Australian households are renters. And so we need to be careful about what is the rental market we're providing for them. It's mostly provided by small-scale investors, you know, the classic mum and dad investors who own one or two properties, and a much smaller group that own larger numbers than that. So, you know, how those landlords are operating is a really important question.
I think the study that you've conducted, this research, has produced I've found some really interesting results. How long do people own rental properties for? This is something that surprised me. It
surprised me as well, actually. I think the average is around 2 years, but about a quarter of rental properties are sold within a year, and about another quarter are kept for 20 years plus. So there are quite different patterns playing out.
And what's the reason for that, the quick turnover?
A couple of things. Partly it's about the age and the income of the landlord. So those who are younger tend to sell more quickly, either because they get into financial trouble because the returns aren't quite what they were hoping for, or costs go up, or they're looking for that capital gain on the property market. So, you know, there are a few different drivers there. Whereas most sort of mid-aged landlords are keeping the properties much longer. They're looking at a retirement income and a nest egg.
And so what stability does it bring to the housing market to have Australian families own perhaps an extra property that goes into the rental market?
Well, if it's kept in the rental market for a long time, it creates stability for renters as well as for landlords in terms of their rental yield. But when those properties are being turned over at a regular rate, that's disruption for the market. That means that tenants are often evicted, and a lot of movement, a lot of cost, a lot of stress that comes with that.
And that must affect price too, must it?
Absolutely. I mean, we're still in a market where the rental vacancy rate in Australia is around 1%. I think 1.1% is the most recent statistic there. That's a very low vacancy rate. Usually it hovers more like 2.5% to 3%. That's a healthy churn in the market. But when it's down around the 1% mark, where it's been for nearly 2 years, that means there's a lot of competition for spaces, and people being evicted just adds to that.
Talking to people in Perth over the past couple of days, struggle with people getting rentals there is very, very real. I wonder what you've made of this big debate we've had this week with the unveiling of the Coalition's housing policy on tax breaks, and then Labor's promise to allow 5% deposits on housing for young Australian families. I mean, do you think these policies are going to make much of a dent? Have you been pulling your hair out alongside other economists?
Well, I think, you know, there's demand-side measures and there's supply-side measures. And what we've seen from the Coalition is a demand-side measure. It's increasing demand for first-home buyers by giving them some tax breaks once they get into home ownership. On the Labor side, they're making it easier to get into home ownership by reducing the amount of deposit you need to save up, which is a big barrier for many families. But on the supply side, there's a much starker contrast. Coalition haven't put out a supply side policy. They've described their mortgage interest tax deduction as a supply side measure, but it's not, it's a demand side measure. On the supply side, what we do see from Labor, though, is $10 billion investment to build 100,000 homes over a 7-year period that'll only be available to first home buyers, not to investors. So it's getting people into home ownership. And we've seen nowhere near enough supply side measures over the last 40 or 50 years. So that's an important step.
It's interesting though, because the Coalition says it's got this infrastructure fund, which it announced I think late last year, and it said that it wants to work with councils on development applications. I mean, that would be welcome also, wouldn't it, having a look at what are the barriers to development?
Yes, I mean, I think, you know, we need to be thinking about the shape of our cities as well. So thinking through where we're building new housing. Now, the cheapest, quickest way is to just create new greenfield estates on the edges of our cities, expanding the urban footprint further and further. But if you look at our largest centres, they're already very low density, very spread out cities. So continuing to expand those boundaries beyond what the states are comfortable with is a challenge there. We need to think about increasing density in our cities and building up rather than out. So working with the states and cooperating on some agreed strategies is what we need.